Over the past decade, the UK economy has faced a series of challenges. The post-2008 productivity slump was exacerbated by Brexit, followed by the COVID-19 pandemic and the brief tenure of Liz Truss. As a result, the UK's median household income has remained essentially stagnant. The recent surge in inflation has only added to the economic woes. In recent years, the UK has struggled with some of the highest inflation rates in the developed world while also experiencing some of the lowest growth rates. However, in recent months, the UK economy has unexpectedly started to outperform expectations. Growth has been notably strong, inflation has decreased, and from a certain perspective, the UK seems better positioned than its European counterparts to handle escalating geopolitical tensions. In this video, we'll explore why the UK economy has recently shown surprising improvements and assess whether this small economic rebound can be sustained. Let's begin with a quick overview of the UK's economic performance over the past few years, which has been far from impressive. Like many other countries, the UK was severely impacted by the surge in energy and food inflation during 2022 and 2023. Inflation had already been on the rise since 2021, driven by a spike in consumer demand following the pandemic, reaching 5.5% in the UK in January 2022. This was followed by a dramatic acceleration after Putin's invasion of Ukraine, with year-on-year inflation peaking at 11.1% in October 2022. Inflation remained above 10% until April 2023 before falling to 4% in January 2024. For context, this inflation rate was higher than that of both the US, where inflation peaked at 9.1% in June 2022, and the Eurozone, which saw inflation peak at 10.6% in October 2022. Comparatively, inflation in Germany peaked at 8.8% in October 2022, in France at 6.3% in February 2023, and in Spain at 10.8% in July 2022, before falling to 1.9% by June 2023. This was well below the 8% yearly rate the UK was enduring at the same time. Typically, high inflation is often associated with strong economic growth, as it usually reflects robust domestic demand, which should lead to high consumption and a relatively high GDP. However, this has not been the case for the UK. Despite its already underperforming GDP compared to most G7 countries, with GDP per capita down about 1% in real terms since the pandemic, the UK continued to exhibit weak growth throughout 2022 and 2023. After a period of relatively strong growth in the first quarter of 2022, the UK economy stagnated for 7 consecutive quarters until the end of 2023. By the end of 2023, the UK slipped into a recession, defined as 2 consecutive quarters of negative growth, with GDP contracting by 0.1% in the third quarter and 0.3% in the fourth quarter. Recently, however, there has been a noticeable improvement. In the first quarter of 2024, the UK economy grew by 0.7% quarter-on-quarter, translating to an annualized growth rate of nearly 3%, the highest among G7 countries. The second quarter of 2024 also showed strong performance, with the UK economy expanding by 0.6%, the second fastest growth rate in the G7, just behind the US. Notably, the UK experienced a remarkable growth of 0.4% in May alone, double what analysts had anticipated. It is important to keep these developments in perspective. In many respects, the UK is merely catching up with other developed economies that have generally performed better since the pandemic. The UK still ranks as the second worst performer in the G7 based on this metric. Nonetheless, positive economic news is rare for the UK, and many commentators and the public had previously resigned themselves to the belief that the UK economy was doomed. This shift in economic outlook has led to a significant upgrade in forecasts for the UK's economic performance in 2024, with analyst predictions rising from 0.4% at the beginning of the year to 0.9% by July. So, what's driving this recent improvement? A closer look at the data reveals that much of the recent growth has been fueled by the UK's services sector, which has expanded by approximately 2% over the past 6 months. This is a promising sign for the UK economy. Often overlooked by the media and politicians, the UK's services industry is quite robust. The UK is the second largest exporter of services globally, trailing only the US, and accounts for about 7% of global service exports. In 2023 alone, service exports grew by a further 7%. Services include sectors such as insurance, banking, and education, areas in which British companies excel internationally. While the UK has struggled with exporting physical goods like cars and oil, negatively impacted by Brexit, its services sector has remained resilient. The focus on services is beneficial for a couple of reasons. First, global demand for services, especially those in which the UK excels, such as legal and accounting services, has been growing faster than demand for physical goods since at least 2018. This trend is expected to continue as economies develop and professionalize. Second, services are less vulnerable to geopolitical tensions compared to goods. Countries like the US, China, and the EU are competing fiercely for manufacturing market share to secure industrial independence. This makes global markets for goods increasingly competitive, particularly for economies like Germany that are heavily reliant on goods exports. On the other hand, services trade is less affected by geopolitical frictions and could even benefit if rising geopolitical tensions lead to increased demand for legal and insurance services. However, there is a slight downside to the UK's strong services sector. It has contributed to persistently high service inflation, which stood at 5.7% in June. This might make it less likely for the Bank of England to cut interest rates in the short term. Nevertheless, overall inflation levels are not intolerable, and the slowing wage growth suggests that the UK is not at risk of a wage price spiral, a scenario that would be of great concern to central bankers. Ultimately, this positive economic news is advantageous for Prime Minister Rishi Sunak, as he gets to take credit for improvements in the economy, despite not having direct control over many of these changes. Strong economic growth also provides a financial cushion for investing in public services without raising taxes, something Sunak has pledged not to do.